I'm Anthony Smith with HFG Trust, and this is the Chart of the Week video. Hello and welcome to our weekly video. If you tuned in last week to watch how higher discount rates can negatively impact growth stock prices, that was some pretty heavy stuff. This week our content is much lighter, and I've even sprinkled in a few gift ideas for the very last minute shoppers out there. You may have heard of the Santa Claus rally, in which stock prices rise at the end of the year around Christmas time. Specifically, the last 5 trading days of the year coupled with the first 2 trading days of the new year. So I've been a student of investment markets my whole career and do believe that markets are efficient, meaning that security prices at any point in time incorporate all available public information. Believing in a Santa Claus rally would be inconsistent with a belief in efficient markets. But there does appear to be something here. I looked at the S&P 500 going back to 1980 and found that in the 7 trading sessions that we highlighted, the last 5 trading sessions of the year coupled with the first 2 trading sessions of the new year, stocks did outperform. And the best way to quantify that outperformance is to annualize those returns during the Santa Claus rally and compare it to actual realized annual returns for the S&P 500 over the same period. All right, so the Santa Claus rally had annualized returns of over 30% compared with actual annual returns on the S&P 500 of about 10% over that same period. Wouldn't you like to know why? Why might stocks rally at year end? But before we dive into some of those explanations, let's highlight gift idea number 1. It's the Tell Me Why book. And I'll bet that some of you recognize this cover. We had a copy of this in our house growing up, and I got to think there's a modern day equivalent available for the inquisitive children in your lives. I would argue that the internet does a fine job of answering questions, but it only answers the questions that you come up with, that you have on your mind. Whereas with this book, you can thumb through it and get answers to questions that you didn't even know you had. All right, let's move on to some explanations for the Santa Claus rally. Short sellers on vacation. And by this I mean institutional, large short sellers. So with fewer offsetting sellers out there, it's easier for stock prices to rise. Lower volumes. When the big institutional investors are on the sidelines, it's easier for smaller, optimistic retail traders to push up stock prices. Tax loss harvesting is pretty much wrapped up, and so you have fewer offsetting sells out there. Again, easier for prices to rise in that environment. Gifts of stocks to family. So I personally plan to buy some ETF shares for my 2 boys. One of my sons happens to watch his account daily, so I have to wait until the last minute to get the ETFs for him. Needless to say, I haven't had the talk yet with him. He told me last night on the way to the gym that he made $6 in the market yesterday. When the time is right, we will have the talk about investing for the long term. He's just so innocent right now, and I really want to hold on to that as long as possible. Holiday bonuses. We've got some bonuses coming in. Some of that's being diverted to the stock market. Again, bidding up prices potentially. The January effect. This is another seasonal trading anomaly that we won't dive into today. but it is there. So there you have it. You've got some explanations that I think make sense. And as I was putting this together, I got to thinking about one of the most influential books about trading that I ever read. And it is gift idea number 2 for anybody, and I mean anybody, interested in financial markets. It's called Reminiscences of a Stock Operator, and it is a fictionalized account of one of the most legendary traders of all time, Jesse Livermore. This book was published in 1923, almost 100 years ago, but it is truly timeless, and it helps the reader thoroughly understand market technicals and psychology. One of my favorites. Gift idea number 3. The Millionaire Next Door was one of the best gifts I ever received, and it's about how anyone can take some fairly manageable steps over time to accumulate wealth. All right, it's probably, I have to give a quick disclaimer here. So the Santa Claus rally is certainly, it's fun to look at, but it's obviously not something that factors into our investment philosophy, as we're obviously not market timers, we're long-term investors. But again, thought it would be fun to highlight it in this video. That is it for this week. There is no video next week, so we'll see you in the new year. Merry Christmas and have a happy new year.